We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelming on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Bob Quartermain. Bob has extensive global experience in geology, exploration, and development, with more than 46 years of experience in the resource industry. Thanks for joining me today, Bob.
Morning, Tom. How are you?
I'm excellent. It's great to have you. And of course, it's going to be part of our Geo series here. And we're doing this to try and highlight the importance of having the right people and the right geologists in the space, and shows how important those people can be to the, let's say, the success and the vision behind some of these projects. So maybe we can start by getting a little bit about what drew you into geology in the first place.
So I'm from a small town called St. Stephen, New Brunswick, on the east coast of Canada. And I grew up on the Bay of Fundy, which has the world's highest tides, and it would go in and out. And as a kid playing along the seacoast, I just used to collect rocks. And for no other reason, I would bring them home. My mother would cart them around as we made moves and wondering why I had them. They were colorful. And I didn't know I had them. But I guess years later, when I went to university, I had started in computer science back in the 1970s. That was kind of where the focus was going on. It was new. And started in it, and I had to make an elective choice. And so I chose geology, which was the first time you could actually get it in my education system. In high school science, you didn't specifically have geology or talked about our sciences, but not the way we certainly have in the school system now. And I took geology, enjoyed it. So I took another couple of courses in my second and into my third year. And in my third year, I needed a job. I had been working locally in New Brunswick, and I applied to the Geological Survey of Canada. And they sent me to a place called Baker Lake. And for those who are good geographic Canadians, they will know that Baker Lake is more or less the center of our country. It is equidistant from the top of kind of Alert Bay down to White Rock and over to St. Stephen. And it's just south of the Arctic Circle up in Hudson Bay. And I went up there. I was sent there for 4 months. We were a mapping crew of 5 people living in a tent. We arrived in May in the snow. And we had a food supply kind of once a month. The helicopter would drop off food. I learned to cook because every 3 days I had to cook for individuals, and I was in charge of motors, and we would get up and do traverses every day. I would throw a pack on my back and take off, and we would hike 20 kilometers and come back with 40 or 50 pounds of rocks at the end of the day. So 24 hours of sunlight and wonderful adventure. And I came back and thought, wow, someone actually paid me to do this, because I was, grew up as a Boy Scout and venture. And I came back and I switched my major and I went full-time into geology. And from there, this adventure continues to this day.
That's quite a story, Bob. And it really goes to show the amount of experience that you've really had within the industry, right? Starting really from literally the ground up, right?
Oh, very much so. And I think that gets to your point that we as geoscientists, and there are many in this business who are CEOs of companies, have that breadth of experience. So I spent 4 more years up there. I worked there in 90 and 76, 77, 78, and 79. I probably might still be there, but unfortunately my father passed away in 79 and I had to come home and help with the family. So I needed to be closer to St. Stephen at the time, St. John, where we were living. But those 4 years up were highly informative. It allowed me to organize. We would have camps, drill camps, and so we needed to fly in Hercules aircraft. We would fly out of Winnipeg up to Baker Lake. We would move into Twin Otters, take out to the lake. We were maybe 100 miles away from Baker Lake or 100 kilometers. And then we would have a helicopter that would then move the drills around and move our people. We were looking for uranium. We were looking for gold, doing mapping. So you had to spend the winter months, and this was all long form, with the spreadsheet, handwritten. If you're going to have 40 people in camp for this amount of time, how much food are you going to need? How many cans of tomato paste for spaghetti are you going to need every day up there every week? And then you have to send it up on the sea ship, often in the fall. So you had to plan these things out months in advance and getting that planning. But then you also had to do your geology, get out and do your mapping. So you needed to be not only a good geologist, but you had to be a good organizer and expediter. Mm-hmm. And I think that helped me in my career because I'd spent some time as an air cadet, so I had a little bit of military background. And that allowed and informed my ability to look at organizations, but then at the same time, make sure you looked at those details. And, that's what you need to do in this industry. So have a lot of on the ground experience that then when I came back and started working in the rest of Canada, the company I worked for at the time, Essex Minerals, sent me all across the country, whether it was working in Newfoundland, whether it was working in the lower North Shore in Quebec, whether it was working out of Yellowknife. I was working on projects where we were doing drilling and involved in the logistics, all in the 70s and early 80s, where I got this extensive experience, one of seeing the country, understanding the logistics across the country, and working whether in the summertime or working in the wintertime in the Northwest Territories, understanding all the logistics that need to be thought out for a successful program.
Mm-hmm. So, Bob, in your early career, were there any mentors in the space that you looked up to that taught you some really important lessons or, took you under their wing?
Yeah, I would think, the first mentor was my fourth year economic geology professor, Arnie McAllister. Dr. Arnie McAllister is now passed at UNB, but he taught me about 3-point problems. And that's where you need to think in 3D space. And I think that's one benefit that geologists have. If you put a drill hole in the ground and another drill hole adjacent to it, you wonder what's between the two. And by looking and doing 3D projections, you can determine, as we would do up at the Pretium brine, at the Brucejack mine. Sometimes there could be fault offsets, and you can drill and hit a fault, and therefore you have to work the geometry back. So you need to understand geometry as well as what we're doing in underground drilling. Then when I decided to go work for Essex Minerals, Bob Jones, who was my boss at the time, was also a University of New Brunswick graduate, and he was certainly helpful in advancing my career and giving me the opportunities very quickly to run these large camps with many people out of the Northwest, working up in Nunavut and the Northwest Territories. I then went to Queen's to get my master's in 1979 and spent 2 years there. And Jay Hodgson, who was the professor at the time, metallurgist professor, really helped me in thinking about broad mineral systems. And so when you see something in the ground, what do you do? If you see alteration, what might that mean? And then where do you go look within that alteration, as we did with Brucejack, to find a mine? I then went to work for Teck Corporation in 1981, and my boss was Matthew Bleck and John May, and they were both very instrumental in allowing me to start my career the way I wanted to do. When I first started working with Teck in 1981, I went to Lamaque Gold Mine so I could get underground experience. I worked 6,000 feet underground at the Lamaque mine, doing stope analysis, drill it, you would drill off, map it, make sure the ore got up to the mill. And from there, they sent me to a place called Hemlo, where they were just drilling off. And some of your listeners may be aware, but the Hemlo was a unique discovery that started back in 1981 with Corona, and what ultimately became the David Bell Gold Mine and the Goliath Gold Mine. And I was there for that time period, and they again helped my career advance. So I was able to see drilling off a mine, and then I was there through the full building constructing of the David Bell mine. And so the Lamaque experience with a high-grade underground mine, the David Bell experience with another high-grade underground mine, but one which is more ubiquitous, where the mineralization is much more consistent, then was helping and inform the conviction that myself and our team had on the Brucejack project later on, that it would be a mine based off the data that we could see. So because I've had such amount of underground experience as well as surface experience, I can take data from drill holes and make quick assessments with them. It comes with bias that I've had in my career, but I would say with the success of Silver Standard and Brucejack, I would say you could probably benefit from that bias, which I have.
Mm-hmm. Yeah, that's fair. So, as you mentioned, Brucejack and Silver Standard, what are some of the, let's say, the most exciting times when you think back over your career? Were they centered around, making the discoveries, acquiring properties or projects, or different parts of the gold cycle?
Yeah, I would say all of the above. So we'll start with the first. Spending 4 years in Nunavut and the Northwest Territories of this country, where few people ever get to go, was a great experience. And I would go back in a heartbeat. It's a beautiful area of our country. It's pristine. And going there and mapping was certainly a highlight of an early geologist career. When I was sent to Hemlo in 1991, I had the opportunity with Bruce Sturm, who's a friend in the industry. And we went down to look at the first drill holes from the Goliath Gold Mine drilling. The first hole hit a diabase dike. I was there for the second drill hole. And we started undoing the boxes. And at the David Bell Mine, the main mineral zone is about 3 meters. So it's one box. When we started undoing the boxes at David Bell, once we got to the 8th box and opened the 9th box and still in mineralization, this is a major discovery, and what do you do about it? Well, I went back and phoned the office and said, they've hit something. And the bidding went on with Frank Lang and Dick Hughes to buy Goliath Gold Mines Noranda, and they ultimately won the day. But to be there for that discovery. And so in my own career, we had a few of the same when we were working in Silver Standard. We were drilling the Piteria project down in Mexico. It was a discovery from a surface soil sample that had a high grade value. And we staked the ground and started drilling. We came up with 750 million ounces, which was great at the time for Silver Standard. Because of its mineralogy, it's not been developed yet because of the price of silver hasn't been high enough to be able to afford that. But again, that was a grassroots discovery that we had. Developing the Manantial Espejo mine down in southern Argentina, we worked on in Silver Standard, and that became a mine. The Praquitas opportunity, which we purchased, we turned it. It became a mine. I went over to Africa in 1992 to look at what was then called the Tarko project with Goldfields was running, and arrived there in the bush of the Ghanaian forest with a few drill holes, looked at the geology, looked at the extent of it, and was, wow, this is huge. This would be 10 to 20 million ounces. I think there are 20 plus million ounces on it now. So I've been very fortunate that being there for discovery holes and then the development. And as you say, with Brucejack itself, we had some incredible high-grade drill holes there. The best drill holes which ran 44 kilos. That's 4% gold. You pull a drill hole out that's got 4% gold over a foot, right? The average gold mine in the world is a gram. We had 44,000 grams of gold in one drill hole, and exciting. And of course, that led on to the ultimate success of the Brucejack project. But key along the way was doing our bank financing. We had to go raise $600 million to finance the project. And so we were able to go to New York, speak to investors. And when you sign the dotted line that someone has just given you $680 million to go build this mine, that's exciting point. So that's the great thing about this industry is you can go from being out prospecting one day and seeing a barren land grizzly, or you can see peregrine falcons flying around, to raising almost $1 billion Canadian in a single day, and then translate that 2 years later to producing gold every day at a profit from one of Canada's highest grade gold mines.
Yeah, it must be quite the experience to see it from, like you say, a greenfield discovery to production. Like, to be able to have that perspective, I think is one that not many people have, right?
Right. And that certainly was the case at Hemlo. I arrived at Hemlo at, I think, hole 92, which was a little after the discovery holes, and then sat there while we drilled it all off. We constructed it, built it, put in production, spent a few months as the mine geologist there. But it was those experiences which has allowed me in 2010 to look at a 4-inch piece of drill core, which I actually have here, that I looked and said, wow, I've never seen this high-grade gold devolve at a solution so quickly. I did a little bit of geochemistry when I was in university in my 4th year. And geochemistry is really, it's physical chemistry. I mean, a rock is nothing other than a chemical equation that's hardened. And you could look at it, and with the amount of gold that was in that rock, there's no way it could come out of solution unless those solutions were super saturated in gold, right? It's the same if you mix some sugar in water and, kind of warm water and then cool it down, all that sugar will come back out. Well, that was the same. This solution had to have so much gold in it to come out, and there must be more of it. And that's what Brucejack proved, that there was more of it. But because of my experience working underground high grade at the Lamaque mine, and then knowing the lower grade background that you had at the David Bell mine, that you needed about a 3-gram cutoff in order to pay for your operating costs. And anything above that would be profitable. And that's how Brucejack came to evolve. You could see there was low grade supporting the high grade. So the low grade ultimately would help support the operating costs. And then the high grade, although it was quite erratic, would be that sweetener that would allow the mine to have its profit, which it has been making profit since it started operating 5 years ago. 5 years ago now, July the 1st, 2017, we turned the plant on. It's paid all its step up, and it's, making money for its owners.
Mm-hmm. So, Bob, as we talk about the amount of experience that you have over your career, do you find that maybe there has been a lack of interest from younger generations, and there might be somewhat of a gap in geologists or, good project managers from that younger generation after yours.
Yes. And I think one of the variances you have now is back in the 60s and 70s, as a young kid in New Brunswick, I loved adventure, loved camping, right? Mm-hmm. Going out and saying, there certainly weren't any cell phones and nothing else. You had to go make your own fun. And I enjoyed it. And when you look at the career for months on end, I was away from family and with nothing. We had one SPX 11. Every month we would have a newspaper come in. And otherwise you just, you survived amongst the 5 of you in your camp or maybe 10 in your camp. It's very different now with internet and camps where people need to have in all the accessories that you need, which is good for operating the program because you can get data back to the office quickly, but it also allows you to have employees who can reach back out to loved ones and stay connected more. But you need to be able to be willing to go into what are perhaps more harsher environments, and we need the experience around it. We have to do things now in a much more environmentally sensitive area. If you're going to do a drill program, you have to make sure you do your consulting if you happen to be in a First Nation area. And you want to make sure that, as we always did in the past, was usually clean up and make sure that as you leave a project, it was as you found it. So it's very different now than when I would just grab everything I owned and put it on my back and take a bag and go off for 6 to 8 months because I would get moved from one project to the other. Mm-hmm. And that experience helped where I am. And that's one thing that we need to get into our decision makers is having that very basic decision allows you to make good informed decisions and you can make them quick and efficient. And getting that experience for students now can be more challenging because often mining companies may not need as many individuals to be out helping them, or there are enough educated or degreed individuals who take the jobs that otherwise summer students had, because at the time the earth was still, growing in the 70s and 80s, we needed these resources for everyone. Now we're looking back saying, well, to what extent do we need all the hydrocarbons, in where you live, right? To what extent do we need to use hydrocarbons as we look at an electrification of the world? Mm-hmm. So I think it's up to geologists who are coming out of school to be more aware of where they can fit and impact as geoscience professionals in the requirements of the world. I did it with the time we need uranium for uranium nuclear reactors. We're going to need more uranium now with the way the world is going. Certainly, we always need gold because it impacts our everyday life. This iPad that I'm working with, our cell phones we have, all have minor amounts of gold because gold is the best electrical conductor and it's in all the minute connections. We need lots of copper to create these electric vehicles that we have. So someone can be strategic and look and say, here's the training I want, here's the experience I'd like to go, and then I can evolve my career through with this initial experience to help me be a better business person later on to ensure that my career is beneficial to the world and to the community of geoscientists.
Mm-hmm. So, Bob, of course, one of the great successes within your career was Silver Standard. And I was reading, you guys took it from something like a valuation of $2 million and ultimately became worth over $2 billion. So can you share with us some of the history around that?
Right. Silver Standard is an old company. It's 75 years old. Now it's currently called SSR Mining. It was started in 1946, December, working on the Silver Standard mine, which is in northern British Columbia. It was a small, 50-ton-a-day operation, highly profitable. They generated profit that paid dividends. And they started acquiring property all throughout northern British Columbia before the province was well developed. And Teck Corporation came out in 1969 and started investing in Silver Standard. And they became Silver Standard's largest investor. But they were ahead of the curve. They were in these large copper polyporphyries that they found, such as they had interest in the Galore Creek area and the Red Chris project, Shaft Creek project. Red Chris, of course, is an operating mine nowadays. And with the recession that occurred in the kind of early 80s, they got to the point where they just didn't have money or capital anymore, and Teck wasn't funding them. And I had just finished drilling off the David Bell deposit. So Teck asked me to come out and basically help reinvigorate Silver Standard in 1985. So it had this long career, basically of 40 years from 1946 to 45. Found a lot of assets. I came in, we sold some of those assets, and then revitalized the company. And then I just started looking for projects. And we did that for the next 7 years. I hired Ken McNaughton, came to join. He was the second employee. But you're right, at the time, the market cap was $1.8 million when I took over. I recall that. 2 employees, myself and the secretary. We had a little office in Tech's room. And in 1992, Rick Rule and I started speaking. I knew Rick from investment conferences, and he was building his business. And he approached me and said that he, along with Jim Blanchard, who some of your listeners may be aware of, Jim was certainly one of the world's best silver bulls. And he said, "You got the right name, Silver Standard. Let's go look for silver. We'll buy silver, 92. There were a lot of silver assets around. The silver price was low. We would create a bank. We'll go create a silver bank. When the price goes up, we can look to develop these or sell them off." And we did our first financing. It was the more difficult one that Rick and I negotiated. It was 3 million shares at 78 cents because I wanted 80 and he won 75. We eventually ended up at 78 and raised $2.1 million at 78 cents. And that stock went from there eventually to $45, a little over 45, over that from 92 to about 2008. So in that 16-year period. And we started with that model. We started going around acquiring projects, and we would buy old mines that were no longer wanted on pennies on the dollar. And those things then, turned into viable operations, such as Manantial Espejo. We bought that project. The Perquitas mine, we bought it, and then the price got up and we were able to go forward with it. There were a number within the portfolio, and each time we would do a financing. We did our first financing at 78 cents, and then we would do it at $1.20. We did $1.50. We did $2.50, $3.50, $5, $7, and then we did a large financing at $25, which helped us with the development of the Perquitas mine. So we created this large silver bank, and ultimately was able to be sold off. And then I did that for 25 years, as you point out, to 2010, and retired. And within that portfolio, again, Rick, never the astute individual, in 1999, for those who recall, it wasn't great in the gold space either. Gold price was down to 260, silver prices were down. We needed money. Money was very hard to raise after the dot-com boom, kind of 99, 2000. And there was a company called New Hawk Gold Mines, which had $2 million cash, and it had a project called Brucejack Lake, and there they had 20 million ounces of silver. No gold, just some silver. And we merged with them in 2000, and that gave me the money that we went on and were able to develop Silver Standard's other assets. And it wasn't until 2006 and 7 when the gold price went up, and one of our geologists at Silver Standard, who I'd worked with at Hemlo, had said to me, when I look in the files, there's this 500-foot intersection of 0.1 ounces or 150 meters of 3 grams of gold over at this snowfield property up at Brucejack Lake. And so let's go up and drill it. And we started to drill it and ultimately come up with 34 million ounces at snowfield. But we went down and started drilling Brucejack area in 2009. And it was I believe the 12th hole there we hit, and it hit 16 kilos. So again, 1.6% gold over a meter. And we're like, well, that's incredible. So we started drilling that in 2009, and then 2010, I left, and the then management at Silver Standard decided to sell it. So I turned and went and raised $400 million and bought it back personally. And then they say the rest is history. But it was that growth through our involvement with Rick Rule, focus on the silver space at a time where not many people were. We were able to go around and buy this large inventory of silver. And that was very successful for our shareholders, certainly. And during that same time period, I went off and became head of the World Silver Institute in Washington, D.C., which many of those running silver companies, because it's a very small community, right? There aren't many pure silver companies. And that's one of the challenges in the silver space, are finding these pure silver deposits. They're usually polymetallic. They may occur with gold. They've frequently occurred with lead, zinc. And so you have to then be very strategic in buying your projects and advancing them, knowing full well that you're going to have other elements and metals you're going to have to mine along with the silver, the same way in Perquitas, Manantial is gold. But it was certainly a great time. And to go and take a company from a 2 million to a 2 billion market cap in SSR mining nowadays, I haven't looked, but I think its market cap is closer to 4, has that same platform of some of the projects that we started back with in 1985 that have been able to build and grow based off good geology.
Mm-hmm. So, you mentioned the different parts in the metals or the gold cycle. How do you think about raising capital in the bottoms of those metal cycle? Is it important to really show investors a plan of what you're trying to achieve and how you think about being a good steward of shareholder capital in those times?
Very much so. And I went to the Rick Rule School of delivering shareholder value, which is you keep your admin costs down and you put the money in the ground because that's what you're doing, which therefore allowed us, because I was similar mind and executed on that plan, then it was always possible to raise money for the right opportunities. And as you say, that in 2000 and things were challenging, we did the merger. But after that, we started getting success on the projects we would pick up, whether it be the Peteria project we had a Mudgee project in Australia. But as we drilled it and through the drill bit could get that excitement, then it was still possible for investors like Rick or Adrian Day at the time, Jim Blanchard, Doug Casey, who could therefore invest in the company and continue to support us going forward, or we would find their shareholders who would. So if you have the right product, let's call it, it depends, irrespective of what commodity you have, but it's well-reasoned, it has good geology, and you can see the potential for more. You can always raise money in whatever risk environment you're in. Your cost of capital may be higher because you're going to be raising at a lower share price. And so what you have to look at is raising money when you are optimally positioned. And we did that certainly at Silver Standard. The market would be up, people would be there to give you money, raise that money. And people have to remember their underwritings. I know many people would say, oh, gee, my stock is trading at 80 cents. Someone wants to underwrite it at 65. If I don't get 70 cents, I'm not going to underwrite it. The market turns and then they're down at 40 cents. Whereas you take it, the people who buy the shares then are happy and you've got capital and you go and drill and then your other shareholders are happy, right? So you have to look at that relationship between those who are providing risk capital, because there are other choices to go buy other miners, or bank stocks where you can get a 5% return, or some miners, whether BHP or Rio, where you can get an 8 or 9% return. So if you get high risk money, then you should make sure you're rewarding your shareholders back from that aspect of the cost of capital on it. So I've been able to raise money during those time periods. If you look at 2010, when we raised the $285 million to buy the Brucejack asset, 2010 was challenging in the gold space. Mm-hmm. But the quality of the asset was good. And those individuals who did the IPO at $6. And 11 years later, they were taken out by Newcrest for $18. Many other gold equities, their share price in 2010 was very similar to what their share price was, 2021. And so by delivering value, adding through the drill bit, you've been able to create value. And that is always financeable, irrespective of the market. But you do want to try and time it. The current company I'm involved in, Dakota Gold, we have a lot of property in and around the old Homestake mine down in South Dakota. Mm-hmm. And it was private for the last 2 years. We're just public now in the New York Stock Exchange. But we raised money when the market, a year ago was high. There was a lot of interest still in gold space. And people said, you're being dilutive because you haven't got your drilling started, but our attitude, this will provide us the money for the next few years. So now we've cycled into a lower part of the cycle. And we're sitting on capital that will allow us to execute on our plan over the next year and change before we need to go back and look at additional capital to help us going forward. So by being in the markets, I've been running public companies since 1985. I was through the crash of 87, through the challenging times in the 90s, the dot-com bubble, and even the recession we have. So when you have that long amplitude of experience, you then don't spend so much time on the nickels and dimes. You look and say, what's in the best interest of shareholders long term? In light of this experience I had in cycled markets, where do we finance? What about taking money? And always remember, it's an underwriting. When someone is giving you risk capital, you're not there as a corporation to, you want to get the best deals for your shareholders and be least dilutive, but you do want to make sure that you're giving the benefit to the new shareholders coming in. And when you look at SSR Mining, when you look at Pretium, they both were great outcomes for shareholders because we had that philosophy.
Mm-hmm. So were you always trying to, let's say, evaluate takeover targets in the bottoms of the cycle, considering exactly as you just said and pointed out, the experience that you have and really understanding how those cycles work at the bottoms, were you always trying to evaluate and raise money for takeover targets?
Yeah. So during the challenging times in the silver space, yes, we started buying projects. There were a number, I think we bought up to 12 different projects in Silver Standard where I would pay 5 cents an ounce. The silver price was trading at $5 an ounce. I'd be like, I'm going to buy it at 1%. So we could have a project such as maybe the Silvertip project, which is now owned by Core. I did 20 million ounces in it. Okay, $1 million, buy the $1 million. Shafter project down in Texas at the same time, I think, again, we paid $1 million and change. It had 20 to 30 million ounces. So then the Sunrise project was the same way. We bought in the Braquitas project, the individual selling it, we bid them. And the thing, because the silver space was so small at the time, we would be the only bidder. So we'll show you a bid, and then that bid is it. And frequently the bid was in Canadian dollars. And the time the US dollar was trading, the dollar was at 66 cents US. And I remember one time offering an individual in the States a bid. We were here in Canada and we agreed, $1 million, great. And then they came back and I sent the papers and he said, this is $1 million Canadian. I said, yes. He said, well, I thought it'd be $1 million US. And I said, well, where did we make the deal? He said, well, I was in your office. Right. It's Canadian. It's $1 million. Take it or leave it. So he took the transaction. So we were able to put this portfolio of 100 millions of ounces together when no one wanted it at the cycle, because that call option, which is a model that Rick and others espouse, was financeable because then you were banking. When you come out of the cycle, those assets would be of value. And again, eventually, some like the Shafter mine that we bought for $1 million, I think we sold for 12. The Sunrise mine, I think was the same. It may have gone for again 10 or 15x. The Silvertip mine, again, I think we could bought for around 15 million. So we're able to translate, and it became a bank. We even bought silver at the time. We had $10 million in the bank, and we went and said, well, let's buy silver at $5. We're in the silver space, we believe it. And eventually the silver went to $20. So we had a built-in financing by just waiting over a few years, taking money. It was hard for our board to get around it. And then, all of a sudden we take 1 million ounces of silver for 5, and we've created $20 million within a few years. So our cost of capital is very cheap. So those are the things that you say come from being a geologist, working at a mine. That has been the most helpful, because you see how hard people work every day underground, blasting, moving material, the crushing that you have to do and labor to create that risk dollar value, which then gets invested back in the business. So you are aware of that cost of the economy and the energy cost to be able to provide that to you. And then make sure you're useful with that dollar. You keep your min costs down. Sometimes companies often have lifestyle choices around their min costs, the way they're compensated. And that's one thing I often will look at. What's at min cost versus in the ground, which is providing shareholder value. Or, as you say, looking strategically to take over and acquire assets by looking at a lot of the downtime in the cycle, which we're probably going to see now. With gold price being down, the share prices being down, there's probably many companies out there right now who are looking at their peers, those who are cashed up or have a slightly higher share price value, can then look at other companies and say, let's look at merging around here, because the C-suite, as we call it, the min costs of many companies are quite high now. And sometimes you can have a bit of a dislocate where you've got a good asset, but you've got a full complement of administrative staff on top of the one asset, which you're really diluting every year shareholder value by not being able to advance it. And often having assets in combined portfolios where the admin costs can be shared is an opportunity. And that's often what occurs in these cycles, because I've seen it happen before. It certainly happened when you look at what we did with Silver Standard from 1992 to 2000, into that 10-year period. We bought a lot of silver assets which had single management on it that just couldn't continue to fund, but collectively together with one management group managing all of those. And insofar as, yes, they were in perhaps seven different countries and a few different continents, we efficiently were able to manage with the team we had.
Mm-hmm. So, you're really talking about here is, just optimizing management and the way that these projects are run. So considering that you were so focused on the silver space for so long, what are some of the biggest differences between the silver space and the gold space? Or are they more similar than one might initially think?
No, they're different. Running Pretium as a single asset high grade gold mine was certainly different than running Silver Standard. Now, you speak to the same investor group because many are within it. There are some people who only invest in silver because they remember what occurred previously in the wave silver, went to its highs. because it's a smaller market.
Mm-hmm.
That's for sure. As I point out, finding high-grade silver mines is challenging. There just aren't that many around where they're silver dominant. They usually occur in tandem. And if you think of the periodic table, you have copper, silver, and gold. They're aligned in that aspect of the periodic table. And, you see that in Mother Nature, right? You're going to see copper mines with silver credits around them, gold credits as byproducts. So first you have a limited amount of projects that you can find and work on which are going to be silver dominant. So when you're out looking the silver space, you recognize that you're going to have a different type of processing. And depending on how you have to release it, in the case of Brucejack, which is a gold mine with a little bit of silver, we merely crush the rock up fine. We run the gold through a gravity circuit and the gold falls out and we make bars at site. No cyanide, no other chemicals used in that. And then the rest that don't come out, we put in a concentrate and we send that to a processing smelter facility and they would take the rest out. In the case of most silver, there's very few silver mines that I know where you can, actually produce raw silver right at site. You can through a variety of techniques, but often may need involving a wide variety of chemicals. So there's one difference, just the deposit types are different. The investor base is smaller. There are very strong silver bulls, as we know in the industry, and there are people you can always go finance with silver because they believe that it will be cyclical like gold. And, silver has much wider and broader applications across the industries than gold does. It's the best biocide out there. It's the best tonal metal. So if you want to make a horn out of silver, it's going to have the best tone it could possibly have. But, it can be applied in many applications from its biocide quality. It's electronic. It's the best electroconductor for being able to make so thin. So, half of silver uses goes back into industrial applications, very different than gold. Gold is certainly back into jewelry, back into storage in the ground, but it's much prettier, right? I mean, when you get pure silver out, as I have here, some people come by and say, what's that? It's silver. And they said, oh, it doesn't look like silver. And I get my polishing cloth out and polish it up and it sparkles. And they said, oh, okay, now we can see it's silver. It has unique characteristics which are fundamental to it that is different than the gold space. And I say, if you're looking at generalist investors, they're going to go to gold because it's a much larger and deeper market, right? When you look at the amount of value of gold equities versus the value of silver equities, there's quite a difference in that, maybe an order of magnitude to one. So I enjoyed the time in the silver space. It certainly got me around the world because we were one of only a few companies looking for it. You didn't have much competition. And to your point, when we were building Silver Standard in that decade period, there was no one else looking for those assays. There was no one else in the space other than ourselves. Ross Beatty with Pan American Silver. You had Core. You had Sunshine Mining, which eventually we bought the assets from. And you have Hecla. And, they're still, SSR Mining, Gore Pan American there. Now there's some other silver companies involved that have grown over time, but still a much smaller space than the gold space.
Mm-hmm. So, Bob, considering you've had such a long career, how have the ESG themes really, let's say, changed the space and, made people more aware of the environmental impact? And do you think that it is a completely net positive for the industry?
For those of us who are geoscientists like myself who love being outdoors, I still hike and camp, that I've always had an ESG lens. I guess I would say that when we were building the Pirquitas mine in Argentina, we did it with a North American lens on how we were developing it. Mm-hmm. The same with Manantial Espejo. When you look at what we did with Brucejack, we met the requirements that we needed to do under the, let's say, ESG lens that would come from the governments, but they weren't unreasonable in the way that you would want to do it right. I mean, how things were done historically back in the 40s and 50s and 60s here were not that kind to the environment. And we are now looking to, clean much of that up. On a global basis, there are many jurisdictions and some international companies that do not have the same ESG lens that we have here in North America. And you're right, you want to have the minimal amount of impact on the land where you're going to go and disrupt it in order to develop. But it's a high value opportunity, right? The Brucejack mine is generating billions of dollars of value from a few hectares of land. There is no other land use that you could apply that was going to be able to do that. So we need to understand that there's going to be some change in that land, but let's ensure that we minimize that impact of it in and around the environment, which is one reason why we're doing something mechanically. And the rock that's left over, we can put back in the underground. In the case of tailings areas, we have to manage those better. There have been incidences where tailings haven't been perhaps as well engineered as they would have been. An issue occurred. We're now ensuring that we're looking at that going forward and being much better around it. So I think the ESG is helpful in leveling the playing field of how we make a determination to develop an asset, because it needs to be able to provide a return to its shareholders, but also make sure its impact is minimal on the environment. And what we need to do is be global in that way, moving towards total sustainable mineability for everything we do. And it's something that we as Canadians carry in Canadian mining companies when we go to foreign jurisdictions. But as I said, some of the other jurisdictions or companies located in other countries don't have that same template. And that becomes a challenge with competition, because maybe they can pay more for a project if you're looking at developing something in Africa or perhaps in South America, because they don't bring that same level of stewardship that we as North American companies do. But we need to get everyone on the same page, because we know the impacts that are coming from global warming and our challenges of water resources, which are important. We need water in our industry, but people need water for farming and food and for sustenance. And so we need to look at that competition for the different elements that are required for development of resources. And one area we need to be focusing on is recycling. There's so much of what we have often ends up in a landfill or is, recycled or perhaps ends up in the ocean. Well, maybe part of the cost when we see the inflation we've got currently happening in front of us. But when we look at metal prices, and as those metal prices increase to meet demands, then part of the area we need to look at is how much can we really be recycling? And we're getting better at it. Certainly in Europe, I think they're great at recycling. So let's look and move things back through our economy. And so that creates lots of opportunities for the earth scientists, today's earth scientists, that I didn't have growing up. It wasn't a lens I look at, but it's a lens I look at now. And anything I'm involved in, I'm investing in, I take a look at what's that impact of that project on the environment. And then again, what can our environmental geoscientists do going forward to help make a better world by looking at a commodity we develop for specific use? And once that use is over, how can we repurpose that use? And what's the way we go through and recycle and be able to do it? So there's lots of opportunities, I say, for the earth scientists now with a much wider career avenue that I had at my time when I came out of school.
Mm-hmm. Yeah, that's a great point of recycling, and maybe thinking about that a little bit more deliberately at the beginning of the life cycle of whatever we're going to be producing, rather than trying to work it out at the end.
Yeah, a case in point would be I'm talking to you on an iPad. Mm-hmm. I have a number of cell phones in my desk drawer. I have old Blackberries. Mm-hmm. What do I do with those? They have 37 different elements in them, right? They have gold in them. They probably have 10 or 15 cents worth of silver. So how do we take old cell phones, or what's the price point that when you buy an Apple phone or buy a Galaxy, Samsung, that there should be a 10 or 15 or 20 cent recycling fee on top of that? And when you get that phone, it goes to some processor that perhaps it's not profitable for them, but with this additional cost I've made, I'd rather pay a little bit of money to have that phone go and be refabricated into other uses. When you look at it, a ton of cell phones is thousands of ounces in it, right? There's a fraction of an ounce in each cell phone. So those are the things we need to look at. There's lots of copper that we now need to go back to electric cars. So to your point, what can we start doing in society from a recycling area? Because then it reduces down the amount of new mines we need, right? Mm-hmm. If we can be taking material, instead of having larger mines which go deeper and we, impact the environment more, to what extent by having a small processing or recycling smelter located somewhere, can we in fact achieve the same amount of output that we might from a new mine?
Mm-hmm. Bob, I read that you have worked in over 18 different countries over your career. So is there a preferred jurisdiction that you worked in, either from a regulatory or a deposit type standpoint?
British Columbia. I guess that's why. That was the last province I worked in, and Canada is the last country I've come back to work in. Working now with Dakota Gold in South Dakota is good because it's a mining jurisdiction. It does get around to location. You want to have one where there's a rule of law, one where is, respect for businesses and an area where people want you to come in. I've worked in my career, as I pointed out, early days in the late 80s, I was working on a gold project in Haiti. That's the first time I experienced machine gun fired at close range because I happened to be down there for a couple of coups. So I decided, okay, I learned that lesson, not working there, although the deposit is still there. Worked in Russia in 1989 when Gorbachev was still there, which was interesting. Worked in China from the early 2000s and on. Worked in Argentina, worked all over Africa. We were able to develop the Tarco mine over there, develop mines in Africa as well as in South America. But to your point, I like a good rule of law. So if you have an asset, you can develop it. There's a timeline to be able to develop it. You can make sure you do your proper consultation for it. And that becomes, I think, more of the focus, which is why after I had worked internationally with Silver Standard and looked at the Brucejack opportunity, it was one here in British Columbia, in Canada, and we had a process to go through and to be able to develop it the same way that you can do in the United States. And so therefore, that's brought me back. I'm a little older now than I was, 40 some years ago starting off. And so I'd rather minimize the amount of effort I have for the outcome that we would want. And so I do look at jurisdictions and make my investment strategies that way as well. I've worked all through Africa, worked in the Middle East to a certain extent, and then I've worked in Latin America and know the different governments, and they again are cyclical as to how they function and operate. And so that determines my own investment strategy as to look at the lens in the country, what are the politics looking like? And you can't move the mine. So it's about how will local politics impact the mine, because they are great revenue generators, right? They generate a lot of capital. And so therefore people need to look at that lens. And that's, I guess, how I did it. So came back to BC, and it was very rewarding, both personally, because I get to stay here and live here and could take a day, go up in the mine back, in 4 hours, enjoy the day at the site. I've never been able to do that. Much of my career was spent traveling on a plane to a foreign jurisdiction. So I was happy to be here back in British Columbia, and even working now as we do in South Dakota. You can get down there in a few hours. So it's good for that jurisdictional location at this stage in my career.
Mm-hmm. And of course, you mentioned working in China at one point there. And I've heard you say that the way Eastern cultures look at gold and the transfer of gold from, let's say, west to east could also maybe help put a floor under the gold price. Do you think this is still the case?
Yes, I think there's a point where either Chinese individuals, because they have been the larger buyers, and certainly to a lesser extent, perhaps in India. India has quite a culture for gold jewelry. And so you're going to find with their seasonal festivals they have, or wedding season, that often you can see that's when there'll be an increase in gold price. They are gold price sensitive. Indian culture seems to hit a floor and it won't purchase. But at the same time, the Chinese have been buying up. If you look at the Shanghai Gold Exchange, it continues to buy physical gold and take it into the country. So, down the road, will they use it as they want to be a reserve currency? Has been part of the discussion, right? Mm-hmm. So to use your underprinting of gold to be able to do it. The same way, Russia has a fairly large gold resource. Here in Canada, we have none. We have our gold in the ground. We don't have any in our central bank. But there has been a lot of movement, and continues to be a movement, into China. And I would suspect that you're right, it will form a floor, or even someone like myself. I've been investing in gold. My first work in a project was back in 1978. I first started drilling a gold project in the Northwest Territories. So I've had exposure to the commodity cycles. And I have a certain amount of physical gold and silver, but more gold on a value basis that I keep. And there's a point where, the gold price gets down, then I'll buy physical gold, because I think it's as good as investment as buying the gold equities in that regard. Mm-hmm. And you don't need a large part of the population to be like-minded. And I do know others myself who, will go, there's a bullion trading place in Vancouver, and you go and buy the ounce, buy the kilo, and it makes it accessible. And often, when silver's getting a bit tight, when you go in and say, I'm thinking of buying some silver, and they don't have any buyers right now. Well, if they don't have any buyers right now, then, it means that maybe you're going to see a little bit of a pop in the silver price. So long answer to your question, but I do believe that, yes, there's a floor as this movement of physical metal into the East.
Mm-hmm. So on the other side of that, and of course, tying in the inflation that we're seeing, as you mentioned earlier, we're seeing the energy costs grow substantially. So along with weakening metal prices, margins for some of the miners are really getting heavily compressed. So do you see this as a possible floor as well, just considering that, some of these mines become unprofitable at some point and in some ways start to curtail that supply?
To a certain extent, I think the mining industry has been very astute over the last decade, particularly in 2013-14, when after prices went up and then came down, to make sure they have low cost of mining, right? Most miners, all-in sustaining costs, you're looking at that $800 to $1,000. So you've got still a lot of built-in profit. Now we're seeing movements up into maybe $1,100 or $1,200. But when you think you still have a high margin, if your cost is $1,200 and gold is $1,700, there's a price point. And I would say to see gold getting back down to, a much lower price point, then I would be selling other assets to buy it physically, because I know it is cyclical. And you're right, with inflation coming on, that ultimately that is where people will move to. One of the reasons we may see physical gold coming down, the ETF is one of the larger storage of physical gold, right? And when people are looking for profit or areas to sell in a recessionary environment, as we're seeing, they will sell where they often maybe have the best profit. So if individuals bought gold a while ago, they're looking to say, I want to crystallize some profit, so I'm going to sell my physical metal now. And that could put pressure on it. And of course, that then reflects the share price and the output from the mining companies. But again, I'm a long-term believer that gold has been a good store of value over the eons. It certainly has been for me when I started buying it at $35 an ounce physically. And so, we could see some pressure in costs. We're going to see that hit the bottom line. It may impact on the amount of dividends that we may see coming from gold miners, but many of them have started dividend policies and running like real businesses, right? When you're getting a 1 to 4 or 5% yield from a gold company, that is equal to a utility, then that's where people will want to invest. And so we're going to have to see what inflationary pressures do, more on labor front, probably in the costs. We've had these higher oil prices have gone on for part of a year. We're seeing it work through the system now. The rest will be these other kind of 8+ inflationary costs we've seen globally because of coming out of the pandemic and the supply chain. How will that impact over the next year or two? But then I think the gold companies or any resource company will be good at getting those through their system, finding where they can reduce their costs, or as you say, maybe it involves reducing output or perhaps reducing back exploration, which, as we know, given the right amplitude of time, will put prices up because there is this requirement and need for gold long term.
So, Bob, do you think that we have hit peak gold, and how would you define that?
It's a conversation that has been discussed, I think, over the last few years. I think Chuck Jeunesse, when he was head of Goldcorp, had kind of shown graphs that shown that, the level we're mining at 3,000 odd tons per year or less is kind of the peak. And it's due to the fact that we hadn't had the exploration. You don't find new large mines. I mean, if you look at the Preddy and Brucejack mine that's been found in the last decade, it's producing 350,000 ounces of gold a year. There's ways to enhance that production where they could perhaps get up to 450 to 500. So we may be at peak, but I think we can level off and maybe continue at the levels we have. Over the next decade, you're right. If we have this conversation 10 years from now, we may be in a different position if we don't find more new resources coming in, or they're not developed, or the gold price doesn't escalate high enough that allows people to expand their operations, right? In the case of Brucejack, it's much like an onion. You have a high-grade gold core, and then you have lower-grade gold mineralization outside of it. As the gold price goes up, because it's an existing operation, then you can modify your cutoff grade and be able to produce more gold coming out, and hopefully you'll do that and still get your same return back to shareholders. But there are lots of large, low-grade resources known around the world. The question is whether they can ever be developed, just because of the capital that's going to be required, as you pointed out, the ESG component to it. So, if we are at peak gold, then that would also help put a floor, because it means we are going to continue to have gold going forward. And as a result of that, it will keep the price stabilized at a certain point. But bringing in more gold production than we've been producing over the last 5 years means bringing in a lot more new mines. And I don't see that many which are in the pipeline. But, if gold prices, as some people think, goes to $2,500 an ounce, then there's more opportunity, perhaps see new production coming in. It will come to meet whatever the price is, but it's going to be much more challenging nowadays in getting those new mines to production. The discovery that we made at Bruchac, if you want to say the discovery was made in 2009 and we were producing gold 8 years later in 2017, drilling it off, financing, permitting was quite unique and very quick. To be able to do that timeline, normally it's double that, 15 to 16 years, right? So any new gold mine you may be finding now is that far down the road. And that's why the large mining companies that are producing 5 to 7 million ounces a year from a platform of maybe 15 to 20 different mines, it sounds like a large mining, one single number, but it comes from a wide variety of projects. And you've got to continue to get new projects into that system, and that's becoming more challenging.
Mm-hmm. So what do you think has caused such a rise in that timeline of getting a project from discovery to production? Is it just the red regulatory tape to get through?
Yeah, it's the regulatory requirements now, as you say, in a more ESG environment. You want to look at all the negative impacts that a project may have, and you want to make sure you mitigate all of those. Mm-hmm. And to be able to run through. And there are groups of individuals who perhaps don't want to see any new resource development and impact in the world, but we need it. We need it for the cars they drive in. They need it for the cell phones we do social media on. So there's a requirement that we need pragmatically to the world going forward. But you're right, governments and jurisdictions are taking a closer look and closer scrutiny because of what occurred in the past to be able to advance projects forward. If you look at my career, started with the David Bell mine in 1981, 82, that was permitted and constructed in 2 years. That was what went on in the 80s. And here we had the Bruchac mine. If you really look at it, we hadn't drilled the resource off. So it wasn't until 2014. But we started that process in 2014, 15, 16, 17, and then started construction. So again, it was a 3 to 4 year period from the time we filed our financing, our environmental work, we're able to secure our financing to get it built. So, slightly longer time period. But you've got to get your baseline studies in. So any new project you're working on, in case in point, the Dakota Gold we have a historical area where gold's been mined there for over 125 years. So we have a lot of historical data. But even now we'll start collecting environmental data, doing scans of how we might impact on individuals. And so you're right, it's that scan that goes on in foreign jurisdictions, which will take longer to be able to go through. And then you have to work with your financing models. And so it's just that time that I talk about, that 16 years is kind of from discovery, working through the metal cycle to finance it, as we talked before, how, Rick Roll used to finance us. You may have to go through a cycle while you're financing, which means you're going to have access to capital, not access to capital, and then get into your development capital. And as you're aware of, when you get into the Pierre Lassonde, development curve, all the excitement starts. That's where you want to raise money, because when you get into development, that's where you move into your, perhaps different type of risk capital, where you're going to go to financiers who can look at your model and validate it and say, yes, this model is going to provide this mine and its return. So we'll finance it by debt rather than taking equity. And so, like you say, you need to know where you are in that curve. But that curve now, from the time of a discovery, can take up to 16 years before you're producing at the far end of it. Mm-hmm. Right.
And, that actually led perfectly into my next question. As an investor, what times do you think are the best to get involved? Are there different strategies like that pre-production dip on the Lassonde curve, for example, to be getting involved? Or are there different times that you can think of that are most beneficial to investors?
One of the key things about investing is you often should look at the people behind the company. I often invest in people. So if Ross Beatty is involved in a company, I'll look to invest in it. Tom Kaplan, Lucas Lundin. There are many individuals that I've grown my career with. So who's the individual behind it, and what's their track record, and what are they able to do? Because if they've done it once, they may do it again. So that would be one template. And if they're investing in it because you can look at insider reports or perhaps a financing, someone may do a financing with Ross. He'll do a 10% financing. Well, if this is good enough for Ross Beatty to put in, a few millions of dollars, then maybe I'll co-invest. I'll buy that. I may not get it at the same price, but I'll buy it in the open market. And that's been helpful because he's at the start of the exploration, because he's a good exploration geologist like I would be. You see it. I will see things and say, this is the front end of the exploration curve. I like the geology. I can see what those drill holes could mean by doing a production because of my scientific experience, and use that for my own model. Then often I can invest on dips. If someone's during the exploration phase, they got great drill holes, then they have a bad drill hole, the market may overreact. That can be kind of time to dip, because you can look and say, that's not going to influence the outcome that much. So I think I'll continue to invest in that point in time. And then when it has the great run up and they start to talk about development, there's an opportune time where there may be a little more incremental value. But as you're right, as it looks into development, the excitement of exploration results are going to dip off the same way you would have seen in Pretium. The share price will come down, and then you'll start to look at development. And then often I'll look at that development time frame, see how long it is. As they're getting in commissioning and a group will say, we're going to start to commission, then I will often personally will buy back in. It's a time when a lot of people don't want it, but I'll buy back in thinking over the next 2 years, I'm going to do well, because that next time year period, the share price goes up, they get production, they produce the ounces they want. Then all the generalists or other groups who haven't been following it are now saying, it's now a proven concept. Now we're going to invest with our individuals because we don't need that higher rate of return. And so that tends to be how I invest, or I buy in the larger, outside of gold, some of the more boring, large mining companies that help provide resources to the world. Companies like BHP and Rio, which are just large materials handling, moving corporations that play the cycles, but they do provide a solid dividend back as a producing company. And you can buy them on the cycles too, right? Where their share prices are down, their yields right now maybe 8 to 10%, which isn't a bad, at least you're matching inflation more than you would with money in the bank. But that Lassonde curve, it certainly helps, and it's helped me in my career. It's how I've been able to build up my asset base, is by buying stocks both at the front end, and you have a lot of losers in there. They're not all winners, but the ones that do well, can be 10 to 20 times on your money. And then when you then take later in the curve, maybe you'll make 30 or 40% on your money, but it's better than, what you might be getting at the bank. So I try and catch those two types of the curve, which is the exploration phase. Then when they seem to be getting exploration, make sure I've moved off from it, and then pick back up as a company is starting to get into production, because if it's successful, then you're going to see it have a price appreciation again.
Mm-hmm. So on the other side of that, Bob, what are some real red flags when you're investing in junior companies, when you're evaluating them?
I look at the balance sheets, and I will look at their administrative cost versus cost in the ground. As we often call it, what's the lifestyle cost of the C-suite management versus how much are they delivering for shareholder value is something to look at. And take away out the Sarbanes-Oxley, you have to take away accounting aspects of that. If they have stock options, when Sarbanes-Oxley acquired on it, remove that. Just look at the actual hard costs. How much money's in the bank and what's their burn rate look like in order to make that investment. I always make sure that someone's got a year ahead of working capital to invest, which allows them to get through a cycle, get some results out, in knowing full well they're going to have to finance. Jurisdiction, having worked all over the world, there's some jurisdictions that I do not prefer, and I'm not going to mention it because there's places where other people are less risk averse than I am who will go in and make investments there, but I will often look at the jurisdiction and determine whether or not I want to have that investment in that area. And then it's commodity. I'm very specific. I like the gold commodity. I do believe that nuclear energy provides one avenue for us going forward with respect to energy on a global basis. So I will look at that as investment strategy. So my portfolio is restricted in geography, restricted in amount of working capital, and then I also have a restriction on, commodity, geography, and cash available for adding value.
Excellent, Bob. Well, I think that's a really good summary of the entire industry, and I really appreciate you sharing so much of your perspective with us today. Is there anything else that you think is worth mentioning before we wrap up here?
The industry, the resource industry, is important to the world going forward. And we do have to do it better across all jurisdictions, and we are doing that. But we need people to understand it and people to be advocates. Because in order to provide the resources that ultimately become the everyday items that we use in society, they do come out of the ground or they come from being recycled. And we all have to do our part in understanding that if we want a better world, the cost of those may be higher. And so therefore, it's about perhaps quality over quantity going forward. And let's make sure that the quality of materials that we want to consume in our everyday lives are well sourced and are good to the environment, so we all continue to enjoy this vehicle that we throttle through space on together.
That's a great point, Bob. Would you like to point anybody to find out more about you and any of the projects that you're involved with?
The only project I'm currently working on is Dakota Gold, which you can go on our website, dakotagold.com. I do a lot of philanthropic work, and you've given me the opportunity. I work with Panthera, where we preserve the world's large cat domains, panthera.com. And then I have a lot of focus myself on diversity. And the ARC Foundation in British Columbia works on creating safe places for all students in schools, irrespective of diversity, which they may have. And so focusing on mining, focusing on saving biodiversity, and focusing on making the world a place where everyone can be treated equally and live their most authentic lives.
Excellent, Bob. Well, you certainly have thought of a lot and been very deliberate about your impact on the world. And again, I really appreciate you sharing that with us and sharing your time with us today.
Thank you very much, Tom.
Thank you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.